Joining us today, we're pleased to welcome now Gordon Fellows, president of the Mississippi Bankers Association. Hey, Gordon, thanks for coming on.
Hey, Gerard, thanks for having me.
You bet. So just watching the markets today, we dove into that a bit in the first segment. The economy, honestly, seems to be trucking along pretty nicely with 3% GDP, and the labor market seems to be fairly stable. I also noted that many companies are revising earnings estimates upward, which are all good signs for the economy. And, of course, this is a week after the Fed cut rates by half. But interestingly enough, the 10-year yield is up today. And, of course, in the industry that you represent, a lot of the products that are marketed in the way of loans from commercial banks are tied to the 10-year mortgages and credit card rates. I think chattel loans as well, right, with respect to vehicle loans, a common example. So that would suggest that perhaps the market says, Fed, you got some more work to do. What do you think?
Yeah. Well, so it's interesting, and I'll remind your listeners, the Fed has what's called a dual mandate, right? So part of their job is to maintain price stability, right? So inflation has been the main focus for a while on that price stability front. The other part has been maximum workforce, right? That traditionally the Fed has to balance both of these two things. And interest rate cuts are really the main tool they use, right? So the way they price the cost of borrowing is the main tool they manage both of them. So we had a really good labor number today, right? It seems to indicate that the labor force is in a good spot. Tomorrow we'll have the PCE, one of the core measures for inflation, and so it'll be interesting to see how the market reacts tomorrow on that question, right? I don't know that the PCE numbers are really going to have had time to factor in the rate cut yet, right? So we'll have to sort of see how the market reacts tomorrow too. There's always data, right? And I think sort of from a big picture point of view, kind of getting past the weekly data grind, right? The last 4 years have been pretty wild, right? We got down to interest rates that were almost zero at one point, and then we went back up to 5. There's never the slope of the rate increase line has never really been that sharp ever. And you kind of think back over where the economy could have been in 2024, back in the summer of 2020, and it could be a lot worse than it is right now. I think you hear the Fed talk a lot about Fed Chair Powell talks a lot about a safe or a soft landing. I think the term safe landing is a better term. I've heard some of my members use that. It feels like the plane is going to land pretty safely here. Now, the challenge for everyday people in that is that we had to deal with a whole bunch of inflation to get the plane down, and I don't know that prices are going to go down, right? And I don't know that the election is really going to have much of an impact on that either, right? So, I'm afraid we're all going to have to live in a world where bread and milk and the day-to-day stuff costs a little bit more than it did prior to the pandemic, and that's unfortunate. But if inflation stabilizes at around 2%, that should mean that the cost or what people get paid continues to go up a little bit more than the cost of goods, and that's a good thing. So if it stabilizes at 2%, that's good, but that's still a lot higher than it was in 2020, and I think that's something we're all going to have to kind of learn to deal with, unfortunately.
Gordon, talk about the overall financial health and condition of your members. Those would be the banks who belong to your association here in the state of Mississippi. How are they looking? What are they telling you?
Yeah, so that's a great question. So we have a really strong industry here, a very consistent industry. You think back to Rhino mentioned this in the first segment, right? The housing crisis in 2008, 2009. We were one of the only states in the country where there was no single bank failure related to mortgage bubble, right? Our banks are very consistent, and they always have been. So if you look at the FDIC quarterly data from June 30th, The problem loan number right now is still lower than it was before the pandemic. So credit quality is really good. We are beginning to see a little bit of a tick up in some delinquencies on consumer loans, and you expect that in the
Sure.
inflation environment we've been in.
Yep.
But credit quality is really strong, and bank capital is up significantly over the last 5 years. So there's money to lend, right? And
Yeah.
so I do think some deals sort of slowed down, until the rate cut kicked in. I hope that we'll continue to sort of see, new business investment, and the commercial lending market will be there to support that. I kind of wonder on the consumer side and on the mortgage side when we'll start to see more house purchases sort of kick up. I mean, if you financed a mortgage in 2020, 2021, and you got a mortgage rate of 3%, it's if today's rates are 6, they're down maybe from where they were the height when they were around 7. That's still, that gap from 3 to 6 is still a pretty big gap, right? So
Yeah.
I was talking to a banker yesterday who sort of says he thinks that once that number gets down to, once the mortgage rate gets down to a little bit under 5, you'll probably start seeing some mortgage activity again. So, as I don't think the Fed is done cutting rates yet. I think they're going to keep cutting, and that'll be good for potential home buyers, and that's a big piece of the economy when people purchase a new home, right? There's a lot of
No
ancillary
doubt.
that goes around on that too. So, I guess sort of big picture, the economy is in a much better shape than it could have been in. If you kind of think about what the worst case scenario could have been over the last couple of years. Prices are higher than they should be, though, and that's probably going to stick with us, and that's unfortunate. But in terms of quality of the banking industry, our members here are very safe. They're very sound. They make very traditional credit decisions. They don't get into, sort of exotic credit products. They're just down the middle. We'll take your deposit. We'll keep your money safe, and we'll make loans to people who we know can pay us back. It's been a good part of our economy for a long time, and it's allowed a lot of that sort of stable model has allowed a lot of our banks to grow, to become regional banks. We're lucky in Mississippi. We have I think a banking system that punches above the weight of the state's economy. Right? We have a really good, diverse group of local community banks that are hyper focused on their towns and in their markets, and we also have some regional institutions that can influence things all around the Southeast and beyond. So it's a really positive part of the Mississippi economy that I don't know that people always pay attention to, because it is, banking is kind of boring, but it should be boring,
Yeah.
So if it just sort of goes straight along, and then things are pretty good. And right now, the industry's in pretty good shape, I think, which is saying a lot after the last few years, for sure.
Yeah. Absolutely. Yeah, you want that industry to be sort of non-eventful. You don't want to see it on the front page anywhere, because usually it's not good news, honestly. So, right. And I feel the same, just operating a business in the state and working with banks. You're right. They're down the middle, very conservative, just very common sense in their credit decisions, and I think serve our business community well, no doubt. So in the wake of the Fed funds rate declining, of course, that means the bank's cost of business essentially decreases as well. Are they then seeing an uptick in, say, commercial loans for equipment, just capital type loans? Are they seeing an uptick of that just because the rates come down a little bit?
Yeah, so I haven't heard that yet. There was an expectation that there would begin to be some deals that were maybe sitting on the sideline and waiting for the cuts.
Yeah.
So now that process has started, certainly if you're a business owner, it's a little more appealing, right? The cost of credit is going to go down. You asked about the quality of the industry earlier. I probably should have said this. That is one of the things that. A factor that we monitor is sort of cost of funds. How much does it cost banks to hold money that they lend against?
Sure.
And as you would expect in an inflationary environment, that has gone up tremendously, but banks have maintained stability, sort of through that process. So, a year ago, or maybe even 20 months ago, and I've talked to banks, there was a lot of competition for deposits. That has sort of leveled out now, and now we're just kind of ready for businesses to come in and say, okay, I'm ready to I'm ready to grow. Help me with my credit needs so I can move forward. And hopefully that begins. Hopefully that's beginning this week.
Absolutely. Gordon, appreciate you coming on. Enjoyed the discussion and look forward to talking to you again. Appreciate it.
Always good to visit. Thanks for having me.
You bet. We're coming right back, folks, in the Element Wealth studio. Stay